Hello and welcome. I hope that you are having a fantastic day today. We're going to talk about Bitcoin news today. Bitcoin volatility is at a 3-month low as market awaits a big price move. So let's get into the news. Today we're going to cover 3 different topics. We're going to look at the CFTC Approves Bitnomial to offer futures contracts settled in real Bitcoin. We're going to look at the next generation Bitcoin mining hardware arrives just in time for the Bitcoin halving. And we're going to talk about Bitcoin volatility being at a 3-month low as market awaits a big price move. So should I buy Bitcoin now or should I wait? We're going to give you ideas to help you take profits and avoid losses. Can we get this video to 99 likes? Smash that like button. It really helps us out. Now, I'm not a financial advisor, and this is not financial advice. This is my opinion. So, first thing we're going to do, we're going to look at today's Bitcoin metrics, and this is April 21st, 2020 at 6:30 in the morning. And currently, Bitcoin is trading at $6,824. And we're seeing it at a 2% loss over the last 24 hours. And so as you can see, a lot of the market is in red. We have a few greens poking around here and there. I don't think USDT counts. I mean, it's always at $1. So how can that be in the green? It should really be gray. But it does bounce, like it says, it's up 0.2%. So for whatever reason, it bounces around by a penny or so. Now, the CFTC, which is one of the government agencies in the United States, has approved Bitnomial to offer futures contracts settled in real Bitcoin. The U.S. Commodities Futures Trading Commission approved Bitnomial exchange to operate as a designated contracts market, meaning the exchange can now offer Bitcoin futures and Bitcoin options contracts. The approval granted Monday brings a new player to the still small world of Bitcoin futures in the United States. To date, only CME, CBOE-backed ErisX, and LedgerX offer Bitcoin futures and options contracts, though CBOE ended its contract in early 2019. ErisX sees little volume on its futures. Unlike CME, Bitnomial appears to be focusing strictly on physically settled contracts. So what do they mean by that? A physically settled Bitcoin contract means that when you buy a futures contract, and a futures contract says, okay, I agree to buy Bitcoin in 30 days from today for this price. And so you're hoping that the price goes up so that you're actually buying it at a discount. If the price were to go down, then you'd actually be paying more than the cryptocurrency is currently selling at. And so that could be a good thing, could be a bad thing, but the bottom line is that when that expiration date hits, you'll actually get physical Bitcoin instead of cash. In the past, well, a lot of other exchanges, specifically the CBOE and the CME, have focused mostly on trading contracts that deliver cash instead of deliver actual physical Bitcoin. And so this is a good thing because this actually helps take Bitcoin off the market as the contracts are getting settled and they go into people's actual wallets, because cash doesn't affect the actual supply of Bitcoin. It's just people speculating on the price in a way that doesn't alter the price. Whereas if you're actually taking physical Bitcoin off the market and putting it into people's wallets, their hardware wallets or software wallets, but they've actually taken custody of Bitcoin rather than getting cash, then that can affect the price as you're limiting or reducing the amount of supply. Bitnomial said it was the first and only startup exchange to receive approval to offer both margined and physically delivered Bitcoin futures and option contracts in the United States. The approval allows Bitnomial to track a confluence of generational shifts in the financial markets. First, a new generation of customers are emerging as savvy with trading, technology, and delivery. Second, innovative, new, unregulated derivatives are booming with daily volumes topping $45 billion, but may be illegal for many U.S. traders. It is said in a press release. It said in a press release. So really what they're talking about is there's all of these other exchanges outside of the United States that offer different kinds of leverage trading. You can leverage up to 100 times your money to purchase Bitcoin. You can also trade in futures and options on non-US exchanges, and some of that may actually be illegal for US citizens, or at least illegal for the company to offer it to US citizens. At this time, there's not many exchanges that the US government has gone after to say, hey, you can't offer this to our customers, or to our citizens, sorry. You can't offer this product to US citizens because in the US that product is illegal. So it'll be interesting to see how all this washes out in the future. In a statement, founder and CEO Luke Horstein said the company will start with quarterly futures, micro futures, and options. Contracts trade for 30% margin and will settle on chain rather than book entry. So this, as far as settling on chain versus book entry, some exchanges keep all of that crypto within their own ecosystem. In other words, when you go onto Binance and you purchase Bitcoin on Binance, or you trade for Bitcoin on Binance, Binance has its own wallets set up, and the amount of Bitcoin that you own is actually just an entry in Binance's own bookkeeping. What this company is going to do instead is it sounds like they're going to actually create a wallet, an on-chain, on the blockchain wallet for its customers. And when they settle in Bitcoin futures, when they settle a Bitcoin futures contract or settle an options contract, it sounds like they're actually going to deposit it directly into the customer's wallet instead of putting it into the exchange's wallet. And that could be a big thing, because that means that you have more control over the Bitcoin that's on the exchange, rather than being a little bit more at the mercy of the exchange when it comes to your actual funds. So this is going to be interesting to keep track of, and could be a significant development in the way exchanges do their businesses. In the news also was the next generation of Bitcoin mining hardware is arriving just in time for the Bitcoin halving. Bitcoin BTC ASIC manufacturer MicroBT has revealed its new mining hardware, boasting a hash rate of 100 terahashes per second. That is significant. This product unveiling demonstrates that competition is heating up among major ASIC manufacturers, following Bitmain's pre-sale of its S19 Antminers. MicroBT's forthcoming M30 series of Bitcoin miners was revealed to 4,000 attendees of an online launch event on April 17th. So that's about 3 days ago. These miners will expectedly sell for around $3,900 and $2,800 each. They come with a 12-month warranty as opposed to the 180-day coverage previously offered by MicroBT. And so if you're interested in cryptocurrency mining, a couple of different things that I would take note of. I bought a miner back in 2018, and the landscape, or how do I say this real well? Anyway, bottom line, that miner has gotten to a point where it costs more electricity to run it than the cryptocurrency it actually mines. The miner I bought was a Litecoin miner, and if I plug it in, it's going to burn more electricity than the cryptocurrency it's actually creating. And so for me, it's not even worth running it. But that happens because over time, the difficulty of mining cryptocurrency, that difficulty goes up because there's more and more miners. And so the whole system adjusts itself to try and set it up so that there's only one block mined every 10 minutes. And the only way it has of doing that is making it harder and harder to mine a block, when you see the amount of hash rate increase and increase on the network. And so that way it can reduce the number of blocks that are actually getting created to the point where you only have 10 blocks created every 10 minutes. The problem is that also reduces the amount of income that miners receive from running their miners. And so you'll find a situation where you may spend $4,000 buying a miner today, and in 6 months, in 1 year, in 2 years, at some point it gets to where the electricity cost is greater than the cost of greater than the actual cryptocurrency you're receiving. Now, if you've got free electricity, then what I'm saying really doesn't matter. But I don't know anybody that has free electricity unless maybe you have solar panels on your house, or you have, like I've heard of a hydroelectric plant in New York that set up their own set of miners. But, hydroelectric plant has an abundance of electricity. And so they literally do have free electricity. And so that kind of gives them, all they need to do is pay for the cost of the miners, and then from then on they're in the profit, because it doesn't cost them any additional money to run the miners in terms of the cost of electricity. They may have a small cost in terms of people maintaining those miners and keeping them running and making sure that it's actually depositing, but miners are pretty reliable, and they really don't take a lot of daily attention. And so if you've hired somebody to watch over them, you can have a single employee or even a part-time employee watching thousands of miners and being able to just monitor it from the activity that they see on a laptop, rather than having to go out and physically do something on individual miners on a regular basis. And so it is quite an interesting deal. So, hey, if you do have free electricity, you might consider purchasing some cryptocurrency miners and getting that electricity to actually make you some money. Finally, in the news, we're going to look at Bitcoin volatility is at a 3-month low as the market awaits a big price move. So, Bitcoin market volatility has hit 3-month lows, making a price squeeze that could soon pave the way for a big move on either side. In other words, we could see a big move where Bitcoin goes up, or it could go down. The spread between Bitcoin Bollinger Bands volatility indicators placed 2 standard deviations above and below the 20-day moving average, narrowed to $8.95 on Monday. That's the lowest level since January 6, when the spread was $636, according to Bitstamp's data. Bitcoin has spent a part of the last 2 weeks trading in the range between 6,450 and 7,450, with the range further narrowing to 7,000 to 7,300 since Thursday. And then lately today, it's actually dropped some, as we saw earlier. It's trading somewhere around $6,800. Now, the tightening of the Bollinger Bands is widely considered to be an advanced indicator of an impending big move. When it tightens, it is because we have been consistently trading in a narrower range for a prolonged period of time. And we should see a breakout very soon, said Chris Thomas, head of the digital assets at Swiss Quote. So you can, it's not easy to see, but the red and green bars that you see through here is the price of Bitcoin as it's going up and it goes down. This is that big drop that we had because of the COVID-19 pandemic. And so you can kind of see the movement. Now this light green line is the upper Bollinger Band, and this other green line is the lower Bollinger Band. And as the distance between the top and the bottom bands narrows and gets closer together, as you can see it happening right here, there was a very, very wide margin between the top and the bottom. And then here that margin's narrowed down quite a bit. That's what they're talking about in this article. And when it gets narrower and narrower like that, there's a tendency for it to shoot up or shoot down. And so far at the moment, it has gone down. But it has not broken free from the bottom Bollinger Band. And so time will tell what direction it's really going to have a breakout in. but until it's actually broken through the Bollinger Bands, we don't really have a breakout at the moment. As you can see, as can be seen by Bitcoin's price volatility has exploded following previous tight ranges in October 2019 and January 2020. And so they're talking about some of the different explosions, like this one right here, where it hit the bottom band and then shot right up outside of the top band. And then also this one did just the opposite, where it wasn't at the top band, but it shot straight down. But that's when the entire market shot down. So anyway, different information. Historically, a reading below 0.1 has marked an end of a price consolidation or low volatility environment. So with the metric currently at 0.13, we might see Bitcoin trade without clear directional bias for a few more days. And so that's talking about a way of measuring the Bollinger Band distance. And right now it's at 0.13, whereas 0.10 has marked an end of price consolidation and volatility in the past. And you can see they drew out exactly where the 0.10 had happened in the past. And you can see we had that great big spike in March because of the COVID-19, and then we are quickly approaching that 0.10 mark. So let's conclude. How can I be of service to you? Do you have any questions about the Bollinger Bands? Do you have any questions about Bitcoin miners? Do you have any questions about the CFTC approval of Bitnomial? Please leave your comments and questions below. I'd love to respond to them. If I don't know, hey, I'm just going to tell you, look, I don't know. The article didn't say that. I haven't been able to find it anywhere else. But if I do have an idea, or if I do know something that would be useful, I will definitely share it with you. In the meantime, I hope that you'll like, subscribe, and hodl. And hey, do me a favor. Have a fantastic day.